All right, so if you've been paying attention to the financial markets as of late, you will have noticed, I think it was last Thursday, the consumer price index, the CPI number came in, and it came in hot. Something like 8.1, 8.2% was the biggest number in something like 40 years. Now, if you've been to the grocery store in past couple of weeks, past months, this summer, you go 8.2%. Is that all? It seems a lot higher than that. At the actual grocery store, it seems more like the consumer price index is something like 20%. The groceries where I live, I don't know how it is where you live, but prices has gone up a lot more than 8%. But that's neither here nor there. The point is, the original theory of the case about Bitcoin, and if you listen to this channel, you should check out what Michael Saylor has to say on the topic. And the original theory of the case is digital gold. Bitcoin has scarcity built into the protocol. What does that mean? It means there's only going to be 21 million Bitcoins ever in circulation. Once the last Bitcoin is mined, there will be 21 million total supply in the entire world. The original programmer did that on purpose. To do what? To build scarcity into the protocol. It's supposed to mirror gold. It's a finite number of gold to be mined in the world. Eventually, there will be no more gold to be pulled out of the ground. So the basic law of economics is supply and demand. This would seem to indicate, the original theory of the case with Bitcoin is that there's going to eventually be a really limited supply and probably high demand. The other thing is that a lot of the Bitcoin bulls have been talking about for years is Bitcoin as a hedge against inflation. Now, you figure inflation is off the charts. Why isn't Bitcoin skyrocketing? Well, there's a couple things they didn't anticipate. Most people who are buying Bitcoin these days are buying it as a risk-off asset, which means, in effect, you have your basic, average, everyday retail investor. They're starting to make money on the stock market. They go, making a lot of money on, let's say, Apple and whatever, Verizon. I got my core holdings here, and they're doing pretty well. So let me experiment a little. Let me buy some marijuana stocks. Let me buy some solar stocks. Let me have a little fun. Let me buy some high risk, high reward things. That's crypto. Crypto is in that category. So they go, I'll buy some Bitcoin too with my earnings. Now, the problem with Bitcoin being essentially acting as a risk-off asset is that it's the first thing people jettison when the market turns south. That's why Bitcoin has been going in tandem with the stock market. It's psychological. You start to lose money on your Apple. You start to lose money on your metaverse holding, or what's it called these days? Your Facebook stock. And you start to sell. And the first thing you usually sell are your high risk, high reward stocks, your marijuana stocks and your cryptocurrencies. That's why crypto has been falling so much. In principle, there's no reason on earth why Bitcoin should correlate to the stock market at all. The original theory of the case, as I've said, is a hedge against inflation. Why? Because there are only 21 million Bitcoin in circulation, which means scarcity is built into the protocol. Simple law of economics, simple law of supply and demand. I forget what the actual adoption rate of Bitcoin is these days, but it's still relatively tiny. Something like 5% of the people actually own Bitcoin. Eventually, that's going to be something like 25% of the people, and Bitcoin will be really rare. Now, this could not be true. Or the original theory of the case with just another word about Michael Saylor, okay? You should go check out his videos and listen to him, but I can give you some of the most important bullet points. Okay, one of his theories is, and this is proving out to be 100% correct, is that all fiat currencies eventually go to zero. Okay, if you're not aware of what a fiat currency is, it basically means our money is worth what the government says it's worth. Once upon a time, we were on a gold standard, which means technically the dollars in your hand could be traded in for the equivalent amount of gold. Richard Nixon took us off the gold standard in something like 72, 73, I forget exactly when. So your money is worth what the government says it's worth. And it relies on the full faith and the confidence of the United States government. Do you feel fully confident in the United States government these days? Neither do I. Good point. Neither do I. The problem that Michael Saylor has said, and I tend to agree with this, all fiat currencies eventually go to zero. Why? Because the temptation to print money is too strong. The temptation to solve your economic problems by printing new money, which has been the case, is a big part of the reason why inflation is running so high. is we've had what was called quantitative easing, which is a fancy word for basically printing money, going all the way back to the 2008 when Obama took office. I think is when quantitative easing officially kicked in. It's technically the buying of bonds, but it's a fancy word. It's really a fancy term for printing money. So we've been printing money, as Michael Saylor predicted. Why? Because the temptation for a government to print their way out of economic difficulties is too high, because the money is only worth what the government says it's worth. So if we have like 30 trillion in debt is what we have, the temptation to inflate the currency and print our way out of debt is staring them in the face the whole time. And the short-term benefits, everyone has this sort of vaguely long-term idea, wow, this probably isn't a good idea for the long term, but the short-term political gains outweigh the long-term risk in most political calculations. Why? Because you won't be here in the long term, but you're going to have to win office in the short term. So he's probably correct, which means Bitcoin is worth a lot more than it seems to be worth even now. I understand Bitcoin went up to, as high as 63,000, something like that. Now it's down at, last I checked, 19,000. What you should be doing is putting your money in Bitcoin for the long term and never thinking about it again. That's what I'm doing. That's what you should do. That's what I did a long time ago. And I wish I had my instincts were correct. I just wish I had been, had more conviction about it way back when, because I thought the same thing a long time ago. And I could be rich right now, actually. I made a decent amount of money off of it, but nowhere near as much as I could have, because I was poking around these things way back in the early days when Bitcoin was something like $400 a coin. And I was telling people in those days, this thing is going to be big. This is like, because to me it always seemed like, at the time it was a no-brainer. It seemed to me like I was one of the first people in my way back in the day. I'm an older gent. I was one of the first people to have an actual online computer. I was one of the first people to use the internet in my hometown and with people I knew. And I was going into the city. I used to live outside New York City. And I was taking acting classes, and I'd say, you got to try this thing, the internet. I was like, what's the internet? I was going on it all the time. Granted, mostly to look at porn, to be perfectly honest. That's a huge chunk of what I was doing. I wasn't a Christian then. What do you want? But I knew it was going to be big. And it was the same thing with email. And I had the same feeling when I saw cryptocurrency. People were like misunderstanding the applications for it and downplaying how significant it was going to be. And I was like, this is probably going to be like email. Everyone downplayed how significant email is. It will never replace snail mail, because everybody likes to write letters. Who writes a letter nowadays? Nobody. Who writes a letter? Have you written a letter in the last 10 years? When's the last time you wrote a letter? Probably never. We all use email, and you don't even think about. There used to be arguments back then that email would never replace standard mail. Why? Because the pleasure of writing a letter and all this turned out to be just fallacious garbage. So a lot of the same things were said about Bitcoin. I was saying to people, this is going to be big, this is going to be a big deal. And most people didn't hear about it back then. I would call up brokerage houses. Are you guys selling Bitcoin? Can I buy Bitcoin through you? And they didn't even know what I meant. They didn't even know what that was then. So that's all changed relatively rapidly. And it's going to change. So I didn't maximize my opportunities back then. Okay, long and short of it is, I did okay, but I could have done a lot better if I had stood by my convictions and went with my instincts. But it's not too late. We're still really early in the process of cryptocurrency. No matter what you think, cryptocurrency has not arrived yet. It hasn't even come close. At the end of the day, it's going to be a ginormous asset class. At least 10 million, could be as much as 100 million. Total. At least 10 million. That's nothing. It was already got as high as total market cap, something like 3 trillion. Did I say million? I meant trillion. 10 trillion, could be as high as 100 trillion. Okay, we already hit, I think, peaked out at 3 trillion last year before this recent downturn. So they'll be trading at 3 trillion again, total market cap, and it will get up to at least 10 trillion, at least 20 trillion easily. And I think 100 trillion is not out of the question, potentially higher. It's going to revolutionize the way we do everything, just like the email did. Just like cell phones did, just like smartphones did. I remember a day when I was selling a phone and the revolution in phones. I swear to God, I was working at a Radio Shack down the street in Malibu, and I was selling flip phones. And people would come in asking for the camera phone. That was the big innovation. You got the camera phone? The phone that you can take a picture with? That was the big innovation back then. There were smartphones, but I think they were, I forget what, 1500 maybe, a Palm, I think it was called, and there was a couple of them. They were out there. They were just big and cumbersome. So look at what happened in a very short period of time. Same thing's going to happen with crypto in general. It's going to innovate really quickly in a short period of time. Now, is it possible Bitcoin goes to zero? Yes. I'd say 10, 50% chance. Obviously, it's possible. There's a better chance of something like Ethereum going to zero because Bitcoin is not predicated on its great innovation or its technology. It's not a network in the sense. It's still subject to the network effect. If you do not know what the network effect is, it's very important in investing. Once upon a time, there was a company called Facebook. It debuted at $40 a share. I bought it at $40 a share. What was the logic? There was 900 million active users back then. I was like, they're going to figure out a way to make money off these people. And the network effect is really important in investing. Why? Because people don't like to change. I'm this way too. Once they get used to something a certain way, the network effect takes over. So Bitcoin, Facebook went up against Google Plus, right? I'm going back years, but Google Plus was trying to make headway into the same space as Facebook and it never got off the ground. Why? Because if you want to look up your high school friends and you want to make sure, when you do that, not everyone wants to do it, but if you want to do it, you want to get in contact with people you know, you go on Facebook. Why? Because that's the place where they are. You didn't go on Google Plus. Why? Because they weren't there. That's the network effect. That's its power. And that's going to be in effect with Bitcoin for the foreseeable future. There's a slight possibility Bitcoin goes to zero. I'd estimate at 15%. But if it doesn't go to zero, I say it goes north of 100,000 easily, clears 250,000 easily. And I don't see why it wouldn't eventually top out at least $1 million a coin. That sounds outlandish, okay? Keep in mind, everyone's freaking out that Bitcoin's traded at 19,000. Once upon a time, it was $400 a coin. $400 a coin. If you bought it at $400, you'd be plenty well satisfied with 19,000. You do not see returns like that on the stock market at all, ever, never. And there's nothing about Bitcoin that has changed. The reason why Bitcoin is so powerful is because Michael Saylor is probably correct. The temptation to print money is in full effect in our government, and eventually, fiat currencies may erode. That's part of it. The other part is the network effect. Bitcoin is the marquee name in the space. Bitcoin goes up, everything goes up. Bitcoin goes down, everything goes down. It is the marquee name for the foreseeable future for at least a decade. And there's nothing innovative about its technology that can be innovated away. The problem with Ethereum is in innovation, and there's competitors that are, if you listen to some people, the competitors are better. That's why I put I have some in Solana, I have some in a lot of these different things, because it's possible for Ethereum to be made obsolete. It is not possible for Bitcoin as far as I can tell, because it doesn't work that way. It's not a technological innovation. So its marquee name is built on something else, and that status is never going away. Whereas some of the other ones, easily the status could go away. If the thing is contingent on technology, there's technologies, coming down the pike that are going to potentially make them obsolete. It might not happen. I still think Ethereum is a good investment too, especially trading at something like 1,500, because it might not happen. But if it does happen, Ethereum has a bigger chance of going out than Bitcoin does. As far as I'm concerned, there's a very small chance of Bitcoin going away. Very small. It's there. It's real. But it's small in my mind. And if it doesn't go away, then the law of supply and demand kicks in. Why? Only 21 million in circulation. Only 21 million in circulation. That is practically guaranteed to be trading at $1 million a coin somewhere within the next 10 years, 20 years. That's how I see it. I could be wrong, but that's how I see it. So there you have it, kids. That is my analysis thus far. I'll be bringing up other stuff. I'm taking a look at Quant. If you've seen, Quant has been shooting up a lot lately. So far, I don't have anything to tell you interesting about it. I don't really understand what the product is. I don't really know anything about it yet. There's a couple other things I'm looking at that I'll bring up. The key is in this space, the real way that you can really make a lot of money based off of very little is to find the thing that hasn't happened yet. And that's a constant possibility in the crypto space. Find the thing that hasn't happened yet. Find the coin of tomorrow that's trading for where you can buy 1 million for $60. They're out there where you can buy 1 million of them for $60. And if that's the thing that's going to hit and you're right, you don't have to invest a lot of money to make a lot of money in crypto. You just have to, do a little poking around and get the right coins in your arsenal. So there you have it, kids. That's all for now. Further updates will be coming as they occur to me.